But we know that
Mm.
inflation is somewhat in check. The markets are screaming ahead to new highs, but there are creeping evidence of weakness in the economy there. So, what is your thoughts, first of all, on whether the US economy is as strong as we think?
To my eye, it's always watch the jobs numbers and how they're doing and how it's percolating through the real economy. I characterize, in my head at least, the difference between the UK and the US. They're both spending too much money. They've both got chronic debt issues and they're both spending lots, but one is spending it for a home run, which is America. And if they connect, then the G will get them out of jail, right? So they're going for growth. In the UK, which we'll come on to, I think they're doing the opposite of that. So at least there's the hope that the home run connects. Um, the issue is, of course, are the shorter term GDP numbers that you look at somewhat of a mirage, and that holds everywhere, right? It's too short to say really. So what fundamentalists doing, what's capex spending looking like? How are people really looking at that country as a relatively attractive place, both from a long-term place to do business, set up business, float the business, and also the taxation environment for all of the above. So I think with the US, there's hope, but I think there's, the job market's the one to watch there as to how that's doing and sentiment. But certainly sentiment wise, I was just over a few weeks ago and it was so much better sentiment than I felt last year from pretty much everybody I spoke to from lots of walks of life. Read into that what you will, it's anecdotal. But I think that's the big difference. It's a sort of watch and see, but it's so just generally speaking, what does the economy mean? You're just looking for growth, you're looking for underlying productivity. Are the productivity gains there? Is the AI investment going to lead to those in future or not? What are the energy policies of these countries looking like? Are they going to be able to attract and retain the capital, the people, the growth? There's so many factors that could blow it up or have it succeed. But America's probably got more of the ones where you'd hope it might succeed more.
Based on growth.
Generally, the equity markets are clearly toppy, they're skewed. The multiples of earnings are vast, and terming stuff out in a vastly moving economy where AI might replace a lot of these industries or hit them to meaningful degrees is it really the time you would rationally term out your multiples? So there's a big open question as to whether there's a monetary premium unwind, not least because of the debasement argument of dollar and sterling. And I think it's an hairy time to be investing in shares, especially, but you can apply the same arguments to bonds, of course.
Yeah, we do. And let's break it down a little bit. So I think you're right to
Mm.
say that there is a difference in expectation and that the different growth trajectory, probably as underpinned by tech and the positive story there, is really the differentiator. Let's just go straight into some of the weeds here in terms of inflation. I had anecdotal evidence last week based on my conversation in San Francisco that there is quite a bit of concern from the consumer around inflation. But at a broad level, it seems based on break evens and swap rates that actually expectations are down and they're not in the kind of red zone or the danger zone. So the Fed has done its job in that respect. It can be reasonably relaxed. And it doesn't seem that inflation, at least, is become a big issue in the US. I've got some other slides that will be a different story in the UK. I think the interesting point here, doesn't I'd love to get your feedback on this, is, what are the equity markets actually telling us and why are they at these highs? And there's on the one hand, there's a strong tech trajectory. And on the other hand, there's been this strong free cash flow yield. There's been the fact that margins are high and are being supported. And companies are generally buoyant on their earnings because they have pricing power, because they've secured their margins. That's a very different story in the rest of the world, but certainly in the US for the margin side, it's strong.